All attendees are in listen-only mode.
Welcome, good afternoon everybody to this special midweek webinar. Here we are going to discuss about the various reports which we have released recently and also tell you about the technical outlook of the market from short-term perspective. I'm joined by my colleague Subash. Good afternoon, Subash.
Good afternoon, Devarsh bhai and everyone.
Okay, so first let's discuss about how we did in our performance for the month of April. So about new 14 recommendations were issued, including the 3 previous. 17 total recommendations were closed, 14 were profitable, 3 negative, 82% is the success ratio. And average we earned about 10% in these fundamental calls, in these 14 calls after losses. And average holding period for these 14 calls is 78 days or calendar days. Now, if you were to look at the whole financial year, about 195 recommendation with the 94% success ratio, 11 were losses and 184 was the profit. 15.5% is our average return for 86 days. So about 3 months time, the fundamental ideas are able to give us about 15%. And some of the winners, as many of you know and must have traded, are there on the screen. Similarly, on the technical side, if we see for the month of April, almost all categories were excellent. Obviously, the market were trending and that helps. Almost 90% success ratio in cash trading, 0 to 10, 13 positive, 4 negative. In e-margin, fantastic performance, about 90%, 20 positive and 2 negative. 7% is the average return for the MTFs, including 9 trading days as the holding period. Same is the case with the cash and e-margin for the full year. About 244 ideas were issued. 75% is the success ratio. 5% is the average holding period. So that's about the performance for the research team. Now everybody knows that elections are being held. Lok Sabha election results are going to be announced, and there is going to be likelihood that there will be volatility. See, the outcome of the election results will come on June 4th. Exit polls are anticipated to come on the first evening, and once the final phase of the elections are over, exit polls will come out. The market will react to exit polls on June 3rd, and then again after the election results June 4th, throughout the day we are expecting volatility. In 2004, 2009, 2014 and 2019, we have seen huge volatility in the month of May when the election and the results came out. So if you were to see, these are the dates on which the election results were announced, and you can see about 4% on average. In May 2009, 17% kind of volatility was there. If you were to see the election month volatility, the gap between high and low, we have seen as big as 30%, 30%, 12% and 8%, on average 20% kind of volatility we have witnessed. So it is important that we take a note of this volatility. History does not repeat itself, but it rhymes. So we anticipate that similar scenario from now till the election results are going to happen. There will be volatility. Now, if you are a long-term investor and if you have a large portfolio, it is recommended that if you remain fully invested, simultaneously you hedge your portfolio for a binary event like general elections. So if you are an investor, you should buy Nifty put option and hedge your portfolio. For that, cost is coming around 1.8 to 2%. So when we released this report, the 22,500 put option was available for rupees 408. So the total cost for the hedging the portfolio, which is around 5.62 lakh, was coming for this one amount. Now, if you have a larger portfolio, for example, if you have 1 crore portfolio, it is advisable to hedge it in the multiple of lots, about 18 lots, which we have recommended in this strategy. So total cost is coming like 1.84 lakh or 1.84 rupees of the overall value. By doing this, you are letting go of 1.84% of your gains But if there is any downside, if there is any big fall, you are partially hedged because of this. Now, how much of the portfolio is hedged? It depends upon the beta. If it is fairly large cap, then obviously you will be able to hedge it. If it is mid cap and small cap, then obviously certain portion may have a higher volatility. If you are a trader, then obviously there are three scenarios. One is that number of seats which are going to come is as per the market expectation. It is much higher or much lower. In these three strategies, in these three scenarios, what we should do, we have recommended in this report. I'd recommend that please all of you go through this report and see which call to buy if NDA gets more than 400 seats, if BJP gets between 320 to 380 seats, 360 seats, what kind of market scenario is possible, and how you can benefit by buying this long butterfly spread strategy. And if NDA fails to form the government and if the seats are much lower than the what market is expecting, there could be substantial fall. And if that happens, how you can hedge your portfolio or how you can trade this scenario by buying 22,200 put. So all these scenario and various profit and loss risk reward is enumerated in this strategy in this report. I'd recommend that you please go through this report. So that's what I wanted to cover. Now, how markets are looking from here to next couple of week sessions. That for that I will invite my colleague Subash to share his views. Over to you, Subash.
Yeah, thank you, Devarsh bhai. Am I audible and visible?
Yeah, go ahead.
Okay. Is my screen visible?
Yes, now you have to accept the screen sharing and then it will be visible.
Okay, can you send the message to share so that I can share my screen, that I need the rights?
Yeah, it is
Yeah,
visible. Go ahead.
Yeah. Yeah, so good evening, everyone, once again. So I'll be giving a short-term technical outlook for the next 1 to 2 weeks. So as you can see on the Nifty daily chart, we were recently in a downtrend and we corrected towards the 21,821 levels, and from there we have bounced back. And this bounce back also coincides with the trend line support, as you can see this red line over here. So it has bounced back, and in the process it has crossed the previous swing high of 22,369 and also closed above the 20-day and 50-day SMA. So that is a positive sign. And today it has broken out of the 22,400 to 22,600 range. It was consolidating in that range for 2 sessions, and today it has broken out of that range. 14-day RSI is also around 60 levels, so it's not overbought. It has bounced back from oversold levels of around 40 and now it is at 60. So it is not overbought, which suggests that there is potential for more upsides. So we are expecting the Nifty to move towards the lifetime highs, which is currently at 22,795. And once that is taken out, we could even go towards new highs. Coming to the sectors, most of the sectors are in uptrend. And FMCG, which was recently underperforming, has started performing. Today it was a good gainer. And also auto makes new lifetime highs. And also pharma, metal, realty are in uptrend. Even the media and IT sectors, which were recently underperforming, have started moving up. So that is an encouraging sign for the markets. Broad market indices like mid cap and small cap are also in short-term uptrend. Mid cap index is at a lifetime high, while small cap is just below its lifetime high. So both these indices show further strength potential. So coming to our strategy, we recommend buying selectively. Look for stocks that are showing relative strength and are breaking out with good volumes and are from outperforming sectors. So that would be the strategy for the next 1 to 2 weeks. Now that's all from my side. Now over to Devarsh bhai.
Okay, if you have any questions, we have some time so we can address some queries of the participants. So if you have any question, you can put it into the group, the question mark window, and we will try to answer as much as possible. So first question is from Manen. The news suggests that the market is overrated and bubble is expected to burst. How accurate is this, and precaution needed to be considered for this to happen? So it is true, compared to the historical valuation perspective, markets are overvalued. So we can say that there is a pockets where the valuation is stretched, but it is not in a bubble where if there is any negative news, it can deflate. Obviously, the most important event now is the election results, and if election results are not as per the market expectation, there could be some downfall in the markets. So we have to be very cautious about that, very open about it. So the way to trade is either you create some cash in the portfolio or hedge it using the Nifty options. If you are leverage or if you have any MTF position, it is advisable to keep some dry powder so that if there is any volatility, you can make use of it. Okay. That's it for the today. Thank you all for joining. Thank you, Subash. You can close this webinar.
Thank you, everyone.